Hi, I'm Dr. Christopher Newman. I'm Professor of Space Law and Policy at the University of Northumbria in Newcastle in the United Kingdom. I'm also International Space Law Advisor for Coalstar Technologies.
I'm Ralph Dinsley, known as Dins. I'm the Executive Director and Founder of Northern Space Security.
I'm Alistair Funge, Space Policy and Operations Engineer.
I listen to the Coalstar Project.
And I listen to the Coalstar Project.
And I listen to the Coalstar Project.
Well, they would have had a savings account anyway with Wells Fargo or Bank of America. Now they have a savings account with a new banking platform that essentially makes a promise. It has a charter to support the space industry. So your $10,000 savings account in Bank of America does nothing for the space industry. Your $10,000 savings account for a bank purpose to the space industry pays dividends over the next 10, 20, 30, 40 years by being capital valuable to be reinvested over and over and over again back into the industry. At the same time, you get the same benefits. You have access to your capital, it's FDIC insured, you'll get the low APY that most banks give, or maybe slightly higher, but it's effectively the same thing, but doing amazing things for the space industry. Cool.
I'm going to keep that in. Welcome back to the Coalstar Project. I am Jason Kanigan, the founder of this thing, Coalstar Technologies, a data science and process improvement firm. I am here with Jason Aspiotis, and we're continuing our Season 3 look at investment companies, companies with money who fund space companies. Jason here is the founder and CEO of FinSofie Public Benefit Corporation. He abbreviates that as FinSofie PBC. Thanks for being here.
Thank you for having me, Jason. My pleasure.
You bet. So you've got a great list of questions here that you helped me come up with. You came up with them, and I love the color pink. And let's begin with that. What are your long-term views about space economy growth? I feel that it was kind of getting a bit of a rush going, not for the first time in history, and now we're sort of stalled and we're waiting for that moon visit and all that kind of thing. What are the driving factors to this economic growth?
Yeah. No, it's a good question. I think a lot of people in the industry have different perspectives on this particular topic, right? I'll give you a little bit of a journey of where I come from as well, because I think it will help with the context. So,
sure.
My background, I started as a astrophysics undergrad, moved to grad school in applied physics, worked for Raytheon for about 8 years, supporting their space systems, satellite systems for both civil, NASA, and defense. And then right around 2013, 2014, I was tremendously inspired by Elon Musk and Jeff Bezos, Sir Richard Branson, and what they were doing. And what they were doing is they were exciting not just the aerospace professionals and the aerospace enthusiasts, but they were exciting, incentivizing an entire base of people that can now feel like there's actually something real happening for the space industry that ultimately relates back to us as humans. So, Elon Musk has the bold vision of settlement of Mars. Jeff Bezos has the bold vision of establishing orbital colonies, industrializing the solar system for the benefit of Earth and us humans. And so many others have, similar, maybe slightly varying visions, but the common theme is humans are central to that long-term vision. So I started FinSofie back in 2015, 2016, with the aspiration to help bring about more human involvement from the average aerospace professional, the average space enthusiast, and other people that you may not suspect are actually space enthusiasts, to be more involved in the industry. So that said, going back to the fundamental question of what I believe are the driving factors pushing the industry forward, I actually have a fundamental belief that from an economics perspective, you need humans in space to have a space economy. You can't have a space economy without humans. And whether it's tourism, or some people like to call it space adventure, or other fancy terms, whether it's for scientific research and exploration purposes, whether it's for mid to slightly longer term stay, or whether it's the long-term vision of space settlement, I believe that for the economics of space to be sustainable for the long term, you have to have humans as part of the equation and as part of the business case. And we can go a little bit more into that as we go on with the discussion. The other factor, and this is not something I particularly predicted, 5 years ago, but it wasn't strange to me when it happened. The whole militarization of space and the establishment of Space Force, I think, for better or for worse, is timely. And is it going to be a factor of changing the economics of space towards the better? I think absolutely yes. It's going to help with commoditization of space technology. It's going to help with proliferating more commercial capabilities that further helps commoditization of space technology and services. And at the end of the day, it's going to help bring down transportation costs. All those things are integral and provide a feedback to the ultimate reduction in transportation costs. And for the industry to go become what we all, or most of us, aspire to be, with space tourism, humans in space, orbital colonies, Mars settlement, what have you, we need to have an industry where transportation costs are no longer the barrier.
Okay, so for you, it's driving down that launch cost by having organizations that have the mandate of operating in space, and not necessarily waiting for commercial activity to kickstart that, because we may wait forever in that case, although there is some of that. Okay, now you've got a question here. What is the role of the retail investor in the space economy? I want to step back 1 foot from that and say, well, okay, what is a retail investor? Let's define that.
Yeah, that term sometimes gets a bad vibe, but in the finance world, retail investors, anyone that has a bank account, anyone that has a deposit, a savings, a checking account, anyone that has an account with Robinhood, or E-Trade or Bank of America Merrill Lynch, those individuals are considered retail investors. And the term accredited investors come up a lot on your show, and that is specifically for the demographic that has more than X amount of dollars per year or X amount of net worth. The retail investor is everyone else that has some capital they want to invest, and they do so either through a FDIC insured deposit account or through an investment account. And that's a lot of capital. So in the US, we're talking about almost $15 trillion of deposits that are sitting on the bank's balance sheets. And then you're looking at almost $50 trillion in capital sitting in pension funds, mutual funds, insurance funds. And a lot of that is obviously belonging to other investors, but a large chunk of that is retail.
Okay, so this is a large pot of money. It is probably underutilized when it comes to the space market. I can guess that. We're on a mission to make space boring here at Cold Star. That's our slogan. And space is not boring yet. It is scary to a lot of retail investors, I would imagine, right? The idea of risk and putting my money in what? So let's get back to that question then of what your idea of the role is for that retail investor looking at the space economy. How can they get involved while getting their heart rate down about that sense of risk?
Yeah, and part of why I established FinSofie, my team and I established FinSofie, is to help build the necessary framework in place, the necessary financial infrastructure in place to help enable the average investor and capital holder to make appropriations based on their personal beliefs and aspirations towards supporting the long-term growth of the space industry. So going back to your point about, we're talking about large pools of capital. I wouldn't necessarily call it underutilized in the context of space today, because the space industry is still nascent, it's still emerging. So, if there was $1 trillion worth of investments to be made, it would take at least 5 years, if not more, to deploy that capital into sensible capabilities and infrastructure that have a long-term vision and long-term growth perspectives about them. So the retail investor is going to be important once you have the right infrastructure in place to enable them to deploy said capital and support the space industry. And we can dive a little bit into more about that, but there's several people working various avenues of this. So you've you know about Space Ventures and my friend Brant, and they're doing a great job sort of coupling the retail investor that wants to be part of something emerging, something innovative, slightly risky, but they probably have dollars they want to put towards something like that because they believe in the long-term vision of space capabilities. They want to be part of something that may produce, multiples in the long term. And what they're doing in Space Ventures is allowing that avenue of capital to find a way to deploy itself. What we're doing in FinSofie is slightly different, but you may be familiar with our platform SpaceVault, which we launched back in 2018. And SpaceVault was a proof of concept digital savings account, FDIC insured, for the space professional, the space enthusiast, and eventually even space business organizations that they have savings accounts, they have checking accounts, they have certificates of deposit sitting in Bank of America, Wells Fargo, Citi, or whoever. Nothing wrong with those banks, other than they don't really have a vision for supporting the space industry. So our hypothesis was, could there be a regulated banking institution that could aggregate retail deposit capital from individuals like myself, you, and the many, many viewers of this show, and then our collective capital power could be used to provide long-term financing for space companies and long-term space infrastructure. And I believe that the reason I was invited to the show is the paper I wrote on business development companies, BDCs. So that's another good example of another piece of financial infrastructure that could be integral to allowing the retail investor to be part of the space industry. And BDCs were established legally in the 1980s. They were established to help infuse more capital to small to medium-sized U.S. companies. They've been around in the public markets since the 1990s, and a bunch of them have been around since the 2000s. And they hold significant amounts of capital. And their charter is to invest in U.S. small to medium-sized companies in a variety of industries. So a BDC purposed for the space industry, or multiple BDCs purposed for the space industry, could be a really good way to integrate the emerging investor appetite, retail investor appetite, to support emerging commercial space companies in the US, and therefore providing more financing for the ecosystem and providing more feedback for the ecosystem to keep growing and advancing. So.
Okay, yes, and I hope everyone picked up on that. Part of the reason why I do this show is to get my own education on, like, hey, what's out there and what's the technology and how does this stuff work, right? And I go to people who are actually doing it. And rather than having a private conversation with other Jason here, I'm able to host the show, and we do it publicly, and I'm able to, spread that learning around. So what you're saying then is that there are people out there with values and aspirations and attitudes and that that would match up with ours, right? That do match up with ours about wanting to support space. But what are the mechanisms by which we can help them sort of move that money or deploy that money in a way that is regulated, perhaps safer, and that is using something that is understood by at least some experts like yourself, as opposed to just, I'm going to put some money out somewhere. Like, how do you even get that working together, right? So you're solving that problem. So Brad Arsenault has gone the crowdfunding route. That was going to be a follow-up question of mine. What's the difference, right, between what you're doing and what he's doing? And then you have chosen to go with this public benefit corporation structure, which I definitely want to find out more about. So our next question is, and we've started talking about this, what are some ways retail investors could become more involved in supporting the space economy in the near future? Obviously, coming to you and say, okay, I've got X amount of dollars, and this is, what's the minimum amount that makes sense, and how does that even work? Like, if I have $20 million and I go to a Michael Mealing and I say, okay, I'm an accredited investor, here's my money, deploy, that makes sense to me. How does it work in your case?
Yeah, good question, and remind me to answer the question about how we're different to space in terms of crowdfunding. It's important because,
Yeah.
like you said, there's different mechanisms to bring about more capital flow and support the space industry. So I'll get to answering that, but to this particular question, so we've done surveys the past 5 years to identify, what's the increasing percentage of Americans, at least, that care enough about the space industry to say, yeah, if there was a product available for me, a regional investor product available for me, I would jump onto it. And based on the statistics, we're looking at roughly 5% of all Americans care enough about the space industry. Let me translate that in terms of what that means in terms of capital pools. When it comes to banking, that's roughly $600 billion in the US. When it comes to investment dollars, so think about stocks, mutual funds, pension funds, it's just over $2 trillion. So right now, with the industry being where it is, and it's not yet mature, but emerging exciting form, we have over $2.5 trillion worth of capital that could be earmarked to support long-term space commercialization and industrialization. So what does that mean about so I'm a regional investor, how do I put my $10,000 to support something in the space industry? So that's where the financial infrastructure comes into play. And FinSofie, we're not a financial company. We're not a bank. We're not an investment firm. But what we call ourselves is financial innovation company. So we want to innovate and build and deploy financial infrastructure that helps realize this long-term vision by bringing in more and more retail capital into the space industry. So we're essentially a space-focused capital formation company. You could call that. And we've worked with banks, we've worked with investors, we've worked with consulting firms to help create those necessary pieces of infrastructure to make that happen. So let me give you some examples. So Space Vault, which we launched in 2018 as a beta, we were able to prove that on average, space enthusiasts were willing to open a savings account on the platform worth $8,000. That's actually higher than the average savings account currently for the average American. So think about how many space enthusiasts are out there that have accounts with either Bank of America, Wells Fargo, Citi, Truist, that used to be BB&T and SunTrust. What if a fraction of those people decide, I want to put my money where my mouth is? So I'm going to open an account with this digital bank that supports the space industry. As I mentioned before, that could be as much as $600 billion of deposit capital. Now, banks can't invest all the deposits in any particular industry. That would be rendered as too risky, and regulators will never allow that for the right reasons. Banks are not supposed to be targeting a very specific industry and invest all their deposits or have all their assets in a particular industry. So, but even if said bank were to invest, let's say 10%, that's still a tremendous amount of potential capital that could be underpinning the space industry through a variety of investment vehicles. And back to answer your question about how does the retail investor gain? Well, they would have had a savings account anyway with Wells Fargo or Bank of America. Now they have a savings account with a new banking platform that essentially makes a promise. It has a charter to support the space industry. So your $10,000 savings account in Bank of America does nothing for the space industry. Your $10,000 savings account for a bank purpose to the space industry pays dividends over the next 10, 20, 30, 40 years by being capital available to be reinvested over and over and over again back into the industry. At the same time, you get the same benefits. You have access to your capital. It's FDIC insured. You'll get the low APY that most banks give, or maybe slightly higher, but it's effectively the same thing, but doing amazing things for the space industry. And the capital that banks usually provide comes in the form of debt, right? So, a big part of what we're doing at FinSofie is not just slowly but steadily building the infrastructure necessary to support the flow of capital into the space economy, but it's also developing the right tools to deploy that capital in the space industry. So not much debt has been used to support new space. I mean, debt was a pretty big instrument for financing telecom in the 90s and early 2000s, but it hasn't been a very big instrument to support new space. You may know, SpaceX a couple of years ago got a huge loan from a consortium led by Bank of America. That's probably one of the first examples of, I'd say, a new space company that's received capital through a debt instrument. But it's possible. And the more the industry matures and the more the US government ramps up its, I'm going to call it anchorship of market demand, the more and better the more banks will feel better about making managed risk debt and other types of deployments into space companies, space capabilities. If you like, I could give you an example of a BDC side of things, right? So if there were a BDC trading in the public markets right now, similar to my good friend, Micah and the UFO ETF that was launched a couple of years ago, that's been a great example of a retail investment vehicle where people with money sitting in brokerage accounts, not deposits, right? Bank is deposits, so brokerage accounts, and that's actually a really good distinction to make. A lot of people have deposits. We have our savings, our checking. A lot of people have investment accounts. It's kind of a different color of money, right? So you don't usually mix the two. You have your savings that you just don't want to lose. That's why you put it in an FDIC insured account. And then you have your, I don't want to call it plain money, but you either have your 401ks or your high growth, slightly risky pots of money that you put in your investment or brokerage accounts. And then some people have money for charity, for example, which I won't go into today, but that's another pool of money that hasn't really been utilized for the space industry. But for the BDC example, it will be a regulated investment product that's traded on NASDAQ, for example, and any investor of the brokerage account can go buy stock for this BDC or number of BDCs supporting the space industry. So, a lot of the complaints I've heard the past few years, before Virgin became publicly traded through the special purpose acquisition route, there was no new space company that people could put their money in. So, Virgin is a great proof of concept that there's a demand out there for the passionate investor that cares enough about this vision that makes them feel more comfortable to make those investments.
This is Jason Kanigan from Cold Star Tech, and I'm excited to share with you a new offer from Cold Star that we are bringing out to help both space founders and venture capitalists who fund space companies. And it's on two levels. The lower level is a VC who is looking at possibly funding a space company, but they just don't get it. Right? And a lot of tech founders want to come out and create some sort of technical capability, but they do not understand business. And so you'll look and you'll go, where's the customer here? Where's the business model? And they'll go, but I want to make rockets or something, right? And it's really cool. Well, that, as we know from the dot-com era, is not a viable business model. And so you bring us in. We've got great technical expertise on the space side, folks who have done this sort of assessment before, like our technical engineering advisor, Dr. Rick Fleeter, myself in the process engineering field, plenty of other people with brains to look at this problem so that you don't have to blow your brains out trying to figure out how to make this work. And on the company side, it's a benefit for them because we will show them the roadmap to how you're going to get funded, how you will want to fund them, what changes to make to get VCs excited about putting money in. And so that's good for you. Right? The second level is at a deeper and higher level at the same time. It is for venture capitalists who have given a seed round to a company, a space company, and that has gone on for a little while, 6 months, a year, something like that. And it is time, as COVID has made it, to double down or get out. Those are pretty much the choices, right? It's time to invest further in a thing we already know, which seems to be the direction VCs are going in right now. They don't seem to want to look at new things or stop, just kill the project. And so the good news is, in that situation, there's a lot more going on. There's more meat for Cold Star experts to get in and analyze, right? You're going to have processes in place, whether they know it or not. We'll be able to flowchart those and maybe accurately document them for the first time so we can get some kind of value chain going in the organization. We'll be able to test whether the leadership is the right group of people or whether you're missing something, the strategic direction, the business model, all this stuff. So if this sounds interesting to you, reach out to us. You can email me at jason@coldstartech.com or just connect with me and message me on LinkedIn. That's probably the best way to do it. And I am excited to talk to you. The kind of transformation that we're able to offer here is beyond anything you'll see out there. And as a VC, this will save you so much time and energy, right? Like if you're a VC and you've got 100 companies to look at, you've got 3 days a year to look at each one, maybe, right? That's not really good enough, is it? Wouldn't it be better to have experienced, expert space people who understand space, right? Look at this investment and tell you, here's a grade, right? Here are several grade areas. Is this thing ready to pour gasoline on the fire, or is it just going to go up in smoke? This is Jason Kanigan from Cold Star Tech. Let's get back to the interview. One of the first things that jumped out at me is, okay, you either have debt or equity, right? Those are the two ways of putting money into a business. Does this savings account run by a public benefit corporation, if I'm understanding correctly, does it take ownership shares of that company for a while it invests in it and then sells that off to redeem, or?
No. So let's, the public benefit corporation is just a distinction for our company and our charter, right? So what we're doing as a company is we consider ourselves public benefit because we're trying to build or help build the infrastructure to support the long-term benefit of the public in the context of economic development, industrialization, and future settlement of space. So that's why we as a company are a public benefit corporation. The infrastructure we build, like a digital bank for space, that would be a separate entity, separate organization that is regulated by respective regulators. So in the case of a bank, you're looking at the OCC, the Office of Control of the Currency, you're looking at the FDIC, the Federal Reserve, etc. In the case of the BDC, let's say we're building a BDC or helping build a BDC, that'd be regulated by the SEC. But again, that would be a completely different company and construct to Finsophy. We're just sort of the architects, right? We know where we want the industry to go. We know what solutions are out there to build the infrastructure to assist more capital to flow in the industry. We want to help build that infrastructure, and so we're architecting it and bringing on team members and other players in the finance industry to make it happen. Okay.
So that you will create another organization which will be regulated by whatever organization does that. Right. How will it fund space companies with that money in there then? Will it be through debt, which I got the impression you wanted to avoid? It depends.
So, banks mostly make loans. That's what they're known for. That's what they're good at. That's what their risk management tools and asset liability management tools and what their DNA urge them to do. Banks can make equity investments on a case-by-case basis, but for the most part, banks are good at making loans. To your question about how does my $10,000 get deployed in support of the space industry? As I mentioned earlier, banks will not make a full concentration into the space economy. They're not able to.
Can't do it. Yeah, they have to spread the risk. Yeah.
Right. So, we believe that if a bank were able to make 10% of its investments in the space economy, that's a game changer. Banks will typically stay away from too high concentration in any particular industry, but 10% is not that uncommon. So if a bank were to make 10% of its deployments in the space industry, that means from your $10,000, effectively $1,000 is being lent out to a variety of space companies, space enterprises, or space endeavors that are applying for loans or other types of investments from the bank. Back to the customer that has that particular bank account, there's no tangible benefit that correlates directly to the specific space company, because a bank would probably want to lend out to 10, 20, 30, 40 or more space companies, and those amounts are going to be different. So your $1,000 that has been spread across those different companies, it's just essentially microloans, right? Quote unquote microloans. It's not a microloan by its class definition, but it's effectively your money being distributed in a risk managed way. So the net impact to you is you're supporting the space economy, your money is FDIC insured, but at the same time you're getting interest back. There's no downside. And that's the beauty of trying to build the right infrastructure to infuse deposit capital in the space industry. It's completely untapped source of capital that right now is just not being used for the space economy.
Okay,
it's a lot of it. Like
Jason, is FinSofie then advocating to traditional banks to make this change?
So Spacefall was actually we built Finsophy as we built Spacefall as a fintech platform. So fintech the past 10 years has been a myriad of small digital companies, fintech companies that said, I want to go build a savings account for people that are 1099 contractors, and we're going to build a savings account for them so they can pay the IRS every year, and it's it's controlled, it's FDIC insured, they're earning interest, it's easy. So all these fintech companies have built all these products around very niche applications and what have you. What we built is a fintech digital banking platform that we launched with a bank partner. So we had a bank partner on the back end that provide the FDIC insurance and coverage. They owned the balance sheets. The deposits were essentially flowing through our platform and sitting on the bank's balance sheet. And we just provided the digital user interface and user experience to support that. So that's one example of how it could be done. Another way is to, like you said, advocate that more banks get involved. And that's why we're pushing for ideas like the BDC, because a BDC could actually raise capital from banks. A BDC could be invested in by banks, because a BDC does not fall under what's called the Volcker rule exclusion, which limits banking activity in support of venture capital funds. Some of those rules have changed a little bit, but a BDC is a much safer bet for a bank to invest in the space industry indirectly than it is to do so through a venture capital or private equity fund. So I hope that answers your question about what we're doing. We're laying out we're architecting the pieces, the players, and their organizations and structures of organizations to go achieve these large-scale financial infrastructure projects that will allow the flow of capital. And when I started this 5 years ago, I knew it was going to be a long journey, and it has been. But I'm in it for the long term, and I've been blessed to meet people like Brent, and then Jose and Micah from Keyless Partners, and a bunch of other people. And I'm really excited about what Dylan Taylor's been doing with Voyager Space Holdings. Been very supportive and excited about all the good work that all our predecessors like Space Capital, with Chad Anderson, Mike Mealing, Megan Crawford, all those guys are building an ecosystem of financial infrastructure that's only going to keep growing and growing and growing until it helps accomplish the ultimate vision that we all have.
Which is a lot of activity in space. Okay, so when we first got on, I imagined that the user of this sort of idea or service or Becca's would withdraw their money from wherever it was and put it into something else. But if you're successful in a broad way, they may not have to. The organization that they're at, it sounds like, may decide, okay, we're gonna do this.
That would be a good future. That would be a good future if we can get, let's say Bank of America to open a space affinity savings account, and that's something we've thought about, something we've entertained. the problem with the big banks is, this comes down to barriers. Big banks care about scale. To them, an industry where they can deploy a few $100 million next few years, they don't care.
Right.
And the same goes for the retail side, right? Bank in America, those guys don't need more deposits. They have way more deposits that they can afford, and that's why their APY is 0.0001% because they're trying to get rid of deposits. And other side of the spectrum, small banks are at a tough juncture. The proliferation of fintech and digitization of banking products. Small banks are just trying to keep up. So introducing a new kind of product that has this long-term focus for a seemingly niche demographic like the space enthusiast, the space professional, probably not where a small bank is going to make its bet. So our belief is that, if we want the space industry to have a dedicated banking institution that aggregates deposit capital, that makes deployments back into the space industry, you got to start from scratch. And I can say that that's something we're definitely looking at as an organization. How do you build a bank from scratch that actually is chartered to go do that, bringing capital from the space industry, space professionals, enthusiasts, companies, organizations, and then start making loans and investments for the long term back into the industry.
Okay. So Jason, who do you want to talk to? Who could show up on your radar suddenly that you'd be like, oh my gosh, I've wanted to talk to somebody like you for a year or two or something?
It's a good question. I mean, what we're doing is for the community. We're building this stuff because the community needs financing, needs capital. It needs patient capital. It needs capital that's going to take a long, hard look at the industry and say, look, we don't know what path is the best. We don't really care about picking the winner, but we know the ecosystem is going to grow. So therefore, we're going to make a concerted effort to support the entirety of the ecosystem, because that's what's going to be mutually beneficial for the ecosystem, its players, its current investors, and us potentially as a dedicated bank. So I would say anyone that is interested by this idea, intrigued, we're looking for partners that want to help us architect or build this solution. It's going to take more than us. It's going to take some capital to build a bank for space. And so we're interested to meet anyone that has an interest, whether you are just someone that wants to open an account. Love to hear your opinion on what that account could look like. If you're a company that is intrigued by the possibility of receiving debt capital at some point in the near future, would love to hear your feedback, because a lot of what we would have to do is tailor the debt instruments and the lending service to cater to the space company. Or if you're a large space company or an investor that sees the potential here, right? Because this bank could underpin a positive feedback loop that grows the industry into perpetuity, and that's what we all want. So a large space company or a large investor should this is a good idea, and this is a bet that I'm going to make right now because I know it's going to pay huge dividends for the growth of the industry that we're currently supporting. So yeah, anyone interested in talking to me, I'd love to have a conversation.
Okay. My brain is still floating around on the risk management side of this, because you do not want to set up a bank that suddenly, after a few years, finds itself in the business of owning parts of companies that have failed, for example, right? And I imagine that the space marketplace with these businesses, the assets that we have here are not very attractive to people outside. It's not like you're buying capital equipment, I don't know, earth movers or something like that you can sell if that company fails, right? So what happens in that situation? When you war game this out, and you get to where a company has failed, and this bank that's focused on space is now the asset holder, what are they? What's the plan there? Do you think, or is that just something that nobody's looked at yet?
I mean, no, you're right. Nobody has looked at that yet.
Huh.
I mean, we've looked at that.
Mm-hmm.
I can tell you that, you know, part of the solution is what I mentioned a little bit earlier. It's about concentration, right?
Mm-hmm.
So let's say next year we launched, I'm going to call it Bank of Space, wink,
Mm-hmm.
wink. We're not gonna deploy 10% of our deposits into loans to support space companies. That would be frowned upon and disallowed by the regulators. So our task would be to start slow, strategic,
Okay.
and year after year prove that it is possible to do so. And you know, based on our analysis and you know, the strategy we've thought about and where we see the ecosystem going, and having looked at a bunch of companies and what their capital needs are, we believe it's doable to build a slow ramp up of capital deployment through a bank without triggering any significant risk issues, either internally as part of our control, because you know, as a bank, you have to have those controls in place. Otherwise, the regulators will say goodbye. And the regulators, right? Regulators in banking are notorious because they're so infused, but it's a good thing. It means I, as a bank account holder, will most likely always can believe my money's there, and the very worst case, FDIC will cover it. So that's the beauty of banking. There's no risk to the underlying deposit capital owner. And it's going to be up to the bank to make sure it deploys the capital strategically, effectively, and with a risk management process that passed the test both internally and for the regulator's perspective. So.
Okay. And I guess if you've got a pool of space companies in there as clients of the bank or whatever, they are a ready-made market of potential buyer uppers of assets as well. So it's possible.
We estimate there's $20 billion of deposit capital or short-term liquidity sitting with space organizations. So that's definitely a lot of capital that could also be used to support the feedback loop. And you're right. I mean, a lot of what companies spend money on are assets that most banks don't want to touch. Going back to my saying, you know, Bank of America doesn't know how to underwrite, you know, I'm gonna pick on Astro Robotic. I love Astro Robotic, but you know, they've been doing amazing things. They have, you know, infrastructure that on a bank's books, it could be called commercial and industrial, CNI. And a big bank, like, I don't know what to do with this. But if you have a bank that's purposed from the beginning to be the bank for those kinds of companies, capabilities, and capital expenditures, then it becomes easier to price the risk for those particular companies and their needs. It's just a matter of economics. The industry is not big enough to warrant a big bank getting involved and deploying their huge risk management infrastructure. But for a small, targeted bank that's developed for this, they can do it, and we know they can do it.
Okay. I think I'm getting the impression that staffing this bank with some really good people who understand the space industry and not just money management is critical, because they have to know whether a project or an idea is just plain silly, pie in the sky, or real. With fractional reserve banking, you could hand out that $1,000 or $10,000 or whatever, that 10% several times. And if you don't have a cautious person in that situation or that seat, I think you could overextend yourself pretty quickly if you're too eager to loan this money out. So, I have enjoyed this, and I'm eager to learn more. I was amused that you brought up the strategic giving, right? The charitable giving earlier. I've run into a couple of mechanisms I've seen where attorneys have managed to put together very interesting programs for tax reduction purposes and that.
Yeah,
So very cool. Let's finish up on this then. We've talked about, I guess, the idea of where you would like to see banks go. We've talked about barriers to entry in getting banks and other large financial institutions interested in doing this, i.e. the playground or the swimming pool is just not big enough yet. It will be one day, but it's just not exciting enough to them yet. Where do you go? Do you go to the government? Do you go to other private capital sources to sort of get some more energy in this idea?
Yeah, I do want to talk about the government a little bit, because the government the past year has been very bullish about trying to incentivize more private capital. And a couple of years ago, I was at the Space Investment Summit at the Department of Commerce, and I remember Secretary Ross saying very clearly, we got to get the big banks interested to make investments into long-term space industry growth. And if we can't make that happen, then we're fooling ourselves. So the government is definitely cognizant that you got to have private capital as a strong component to financing the space industry. And what are some things the government could do? I mean, let's look at history. Mm-hmm. So one of my favorite examples, and I always credit Hoyt Davidson for this, my friend and mentor Hoyt Davidson from Near Earth LLC. He had a great idea for taking what was known as OPIC, so the Overseas Private Investment Corporation, that is now part of the U.S. Development Finance Corporation. That merge happened, I believe, late 2019. But OPIC was established in early 1970s by the Nixon administration to support emerging economies around the globe with loan guarantees, in some cases direct loans, in some cases what they were calling political risk insurance, to help finance U.S. companies to go build infrastructure and capabilities in emerging economies. Now, the objective there was to increase American influence across the globe in emerging economies as a counter to Russia back then, or the USSR back then. But what Hoyt postulated was, what if you were to create an OPIC with a focus on space as an emerging economic domain, and could said organization provide loan guarantees, maybe not political risk insurance, but another type of insurance vehicle that allows for significant de-risking for the investor that otherwise would stay away from space. Now they're like, you mean I can make a venture loan deal for $1 billion and the government is backing it? Yeah, sign me up. So that was a really good idea and really timely and relevant. And now the Development Finance Corporation, I believe there are some discussions about, could that be a possibility where government indirectly, albeit through the DFC, because the DFC is actually, it's sponsored by government, but it's an independent organization with its own balance sheet. So it actually doesn't use taxpayer dollars. It has its own balance sheet, and if anything, provides a small little profit every year to the US Treasury from loan paybacks. So could something like that be used to bring the might of the US government indirectly through a government-sponsored organization to provide loan guarantees, insurance, and or synergistic direct investments to complement and or significantly de-risk other investors from deploying private capital back in the space economy? And there's other examples too, but I think that's a particularly good example, given that we know we have done this as a nation back in the 70s throughout today. Could we change that equation a little bit to address the emerging space domain as well as an economic development domain?
All right. And space is not the only industry ever that has had this problem. The retail money that you can access through your local bank office is it's not what they really want to be doing, right? The bankers don't want to be giving you a $30,000 auto loan. That's the retail money out of the branch. They'd rather, have some guy up in the 53rd floor of some Wall Street, office tower deploying billions and, hundreds of millions of dollars, et cetera, in one fell swoop, rather than trying to do hundreds and hundreds of transactions or thousands to add up to a total like that. So, as you say, these are problems that have been solved before, and I like that you're looking to history for possibilities, because not everybody bothers to do that. So I think you and I can have some really good continuing conversations here about these mechanisms. I guess let's finish up with let's flat out state it, because we've talked around it, and that you asked me to remind you to say what the difference was between crowdfunding and what you're doing, and so let's just straight up say it, right, rather than talking around it.
Yeah. So what Space Ventures is doing, they're building a platform where a non-accredited investor, so effectively a retail investor, can go and apply very directly capital into a space company. So I have company XYZ is raising around. I see it on the Space Ventures platform. I can see it. I know exactly what this company is about, what they're doing. I will throw in at $5,000. So that's roughly how Space Ventures works. What we're building is different. We're looking at a community pool. So what we're looking for is depositors, or even in the case of the BDC, investors, to trust the organization with their deposits. They're going to trust it with Bank of America anyways. Might as well trust the bank that you actually care about what it's doing. And then we make the appropriation of that capital via loans and other investments into an array of space companies. So it's just different mechanic, and it's a different risk posture, of course. I don't like using the term crowdfunding for banking, because it's banking, it's not crowdfunding. But of course, both of them, of course, are leveraging the elements of space enthusiasm and space impetus. So that's definitely common. But the mechanics of how it's done and how it benefits the space economy is different. But they are very synergistic. So and I love what they're doing, because they're solving a real problem. They have a plethora of space companies that need seed funding, and this could be a very good way to solve that problem. We're looking at a plethora of companies that need post-venture capital funding to go build infrastructure, either on Earth or in space, and we want to go fill the gap where banks are not going. So synergistic mission, different parts of the space ecosystem, and slightly different mechanics in terms of how the capital is formed.
Very, very cool. Well, I hope our audience sees that and notices that in less than 10 episodes, I'm sure, of season 3 here, we have looked at 4 different mechanisms of providing funding to space companies here, right? We've got our traditional venture capital model. We've got what Dylan Taylor's doing with Voyager with the majority ownership model. We've got your model, and we've got the crowdfunding. And they're all a little different, and it's going to add up to something really big. Where can people go, Jason, to find out more about you? What websites should they visit? I'll link to them below as well.
Yeah, if you just want to know more about FinSofie, the architecture of financial infrastructure, you can go to www.finsophy.com. So FINSOPHY.com. If you want to learn more about our space vault experiment, I'll call it that, you can go to spacevault.world, space vault, one word, .world. And the other things we have working on the radar, nothing publicly available yet, but we hope to be able to start making some announcements, hopefully in the next few months.
Cool. Well, when you're ready to come back to me, and we'll do a quick Make Space Boring news video about that little 5-minute thing, and I'll be able to get that out. All right, Jason Aspiotis, thanks for being here.
Jason, my pleasure.
Hey, this is Jason Kanigan, the host of the program. Thanks a lot for listening to the Cold Start Project. If you want me to send you new episodes of the Cold Start Project so that you don't have to go hunting around for them or watching YouTube or anything like that, go to this page, coldstartech.com/MSB. That's short for Make Space Boring, which is what we're all about. And drop in your email address there, and I will be able to do that for you. Make Space Boring is another little show that I run. It's a shorter format, quick interviews, and news of the day, and sometimes an update of who I'm meeting and what I'm learning in the space field. It's on the same Cold Start Tech channel. Speaking of which, on the YouTube channel, I can do something I cannot do on the audio-only version, which is add playlists. And so there may be topic area playlists on the YouTube channel that you would be interested in digging into and going down the rabbit hole and learning more about. For example, space law and policy, space situational awareness, lunar mining and construction and fun stuff like that. So go check that out. That is at coldstartech.com/play. That's the short link to get there. Anyway, thanks for listening, and I look forward to talking to you soon.